Well, welcome to the next edition of the Privateers podcast. Today I've got Mike Donaldson, the CEO of RMB Corvest, probably one of South Africa's most successful private equity firms. So Mike, thanks very much for joining us today.
Yeah, Oliver, thanks for having me here. And thanks for the intro. I think we'll take those words in either and use that as marketing.
Maybe we can start off right in the beginning. I know we both CAs. Perhaps you could talk us through your journey about becoming a CA. What took you to private equity? What was the appeal there? And your journey to becoming CEO of RMB Corvest?
Sure. How long have you got? Yeah. It is quite a journey, and it goes back many years. I think like most CAs, sort of started in, I was in the old, way before Pricewaterhouse, Coopers & Lybrand, in a little firm in Cape Town. Yes. That's where I did my articles. And again, heard of the buzzword, heard of corporate finance, heard of private equity, but at that stage I had no idea what it was about. The auditing was still trying to basically get through those board exams and qualify like everyone else. Yeah. Post articles ended up in London, again, like most South Africans in those early days. Passage. And there was the sort of mid-90s, it was an exciting time to be in London. So joined Coopers & Lybrand, funny enough, in their London office, actually based in the Reading office, which is just outside London. And that was exciting because, we were doing due diligence, we were flying to Europe. I was in my 20s, life was, it was pretty exciting. I just got into the sort of working world. Any salary in pounds and after articles is pretty good, as you can imagine. So basically doing due diligence, corporate finance advisory. But realized, London is a hard place to grow old. And I think the calling of South Africa was always too much. So after about a 3-year stint, after doing some traveling around the world, ran out of money and ended back in Johannesburg. Joined a corporate finance team with Investec, and that was good. I think certainly my early days at Investec, that's where I think the contact base and just getting to know Johannesburg, getting to know corporate South Africa was really where I grew up. And I think that database of those business cards I still have today. Trust me, I still look them up, and I've got many of those clients in our portfolio now that I dealt with in the sort of early Investec days. And then coming back to private equity, I think the first time I was introduced to it, I had an interview, funny enough, in London with a bunch of London CAs and, their sort of pink shirts, very sort of merchant banking kind of profile. And during the interview, the one guy turned to me and said, "Mike, have you done much modelling in your career?" And I kind of stared at him with this blank look, only for one of them to realise that this little Safa didn't have any idea what they were talking about. And thank God I didn't answer the question. And that's where the sort of modelling concept, and if you know private equity, it's very much about looking at companies, modelling the financials.
The data is everything.
It is all about the data, and it's all about the history. Venture capital is about the future. Private equity is about the history. And whatever happens in the history, trust me, will repeat itself 9 times out of 10. So corporate finance for me was fascinating, but it's a tough job, and you're on the treadmill constantly. And I realized, I think certainly at 5 years sitting at Investec Corporate Finance, I was never going to grow old in that team. I was never going to stay married. It's brutal. And hats off to the guys that can do it. And I always knew there was greener pastures, hopefully somewhere. And I was fortunate then to join the private equity team at Investec through a guy, Thomas Prince, in the old days. Unfortunately, Thomas has passed on now, but he was the one that got me initially into this thing called private equity, which again I had no idea. I'd heard you do some modelling in this thing, and I joined a very young team and a great team. And then after that, ended up at a few years into that, ended up at Corvest. I think I was negotiating against one of the founders at Corvest and ended up having subsequently some interviews. And that was 22 years ago. So the rest is, as they say, is history. But it's been a fun journey.
Yeah, what an incredible track record! What an opportunity you had. Again, young South African talent exposed on a global stage. Your eyes would have been wide open going to London, seeing all these new things and coming back. The benefit of joining an entrepreneurial culture like Investec was certainly known for in the 1990s when you joined that team.
Yeah,
I'm sure that would have resonated a lot with what you're doing within the private equity space. But what exactly drew you to private equity? What was the real appeal for you there?
So I think the real appeal, again, if you've never been in corporate finance, it's hard to understand that sort of trajectory and that sort of treadmill, but it's tough. And, you get involved in a client, you advise him, but as soon as you've advised him and got your fee, you're gone. And I'm sure you know what it's like. Every now and again, you meet a client and you love the client, you love the concept, you get your fee and that's it. Until the next engagement,
yes.
You've lost that ability to learn from that client. So corporate finance is very much like that. You have a transaction, but it's very transaction driven. And then the client moves on and maybe you see him in 2 years' time or maybe 5 years' time if you're lucky. And I think getting the sort of cradle to grave where you can get involved in a client that you love, you get to understand the business, you're not from the periphery, you're actually on the inside. And then you live with it. So those decisions, if you buy into an investment in private equity, it stays with you. We've got some in our portfolio now that Fidelity Security. I mean, it's been with us for 34 years or whatever the number is. It's close to that.
Wow, that's quite a run for
exactly.
investments.
So you live with your mistakes, but you also, at the flip side, you get to see how these guys and entrepreneurs in South Africa, how they run their businesses. And you sit on a board alongside them, you learn. So yes, they're learning from you in terms of some M&A and financial engineering. But the real skill in South Africa is growing these businesses. And I think if you can work with these founders and see how they operate, that to me is the exciting part of private equity.
So what would be some of those skills that you as a team at Corvest might talk to some of your investee companies about? This is what we could impart on your business, and this is why private equity might make sense for your business.
Yeah, I mean, I think it's varied, but I think mostly it really revolves around financial engineering. I think in private equity, it's very dangerous. If we go in as a team and tell an operator or a founder who's been running his business for 20 years or 30 years how to run his business, that's a problem.
Yeah.
And that's a recipe for disaster.
Yeah.
So, I think you've got to stick to your knitting. You've got to know what you're good at. So I think in many instances, financial engineering from a bank or from a private equity team is where we can really add the most value. So whether it's putting in debt, whether it's layers of sort of different elements of debt, whether it's taking risk. A lot of operators know how to run their business. They can make a widget. They can make widgets faster. But they don't quite know this MBO concept or gearing up their management team or going into new markets is something quite foreign to them and very difficult for them to take risk by themselves. So often we find as a partner, all of a sudden, it's, guys, you can do this. You've got a partner now. You've got a bank next to you. I think we're fortunate at Corvest where we've got RMB as a partner and a funder. So we make mistakes. We continue to make mistakes. Hopefully we make little mistakes that we can correct. And I think that imparting that sort of risk analysis onto a founder can help them grow because now they can take a measured risk. They've got a partner next to them.
Yes.
And we've got an element of understanding layers of debt that most entrepreneurs are terrified.
We've mentioned this a couple of times on this Privateers podcast, that entrepreneurship itself can be quite a lonely journey.
Yeah.
And now you have this ability where you as a private equity investor come in to a successful entrepreneurial business and you partner with them and you go along that journey with them and share that risk with them. What is it that you look for in a founder of a business or a business that you would be interested in investing in from a private equity capacity?
Sure. If I had that answer, I think we'd make a lot more money out of it. But I think it's passion here. I think it's passion. And you see these entrepreneurs and founders, and it's not always founders. Sometimes it can be a corporate animal that the guy ends up being the CEO, but he doesn't have any equity. And if he comes to us now, I want to buy it out of a parent company, and we've done many of those deals where the CEO would come to us. He didn't found it. He was hired a couple of years before.
Yep.
But sees an opportunity, and he's happy to risk. He said, guys, I'll risk everything. I'll borrow money. I'll put my life into this thing, but it's passion. And if someone can breathe that passion and live that passion, I think for me and for us as a team, that's probably the number one thing we need. And as I said, normally comes through a founder because he's lived and breathed it. He started this baby, and we can see it. They walk into our office within 2 minutes. We can see if someone really understands their business, they love it, and they will risk anything to make it better. Those are the guys those are the teams we generally back.
That sort of entrepreneurial spirit that you spoke about, it's very much at the core of this business.
Yeah.
A lot of our clients are those successful entrepreneurs.
Yeah.
That energy is contagious. You can feel it immediately.
exactly.
They live, eat, breathe, dream their businesses. And for us as a practice, there's a certain amount of satisfaction we get in going along that journey with them as advisors, not in the private equity journey that you're talking about, and helping them navigate those different parts of their business, whether it be expansion, succession planning, just de-risking their own personal balance sheets.
That's exciting. It's fun. And I mean, and that's what we learn from them.
Yeah.
So yes, they learn something from us, but ultimately I think we learn the most, and we get the most benefit out of partnering with these successful people.
What are the challenges that you're seeing as a private equity industry facing us in South Africa over the next couple of years? What are the things that make you worried?
Sure, I think the biggest thing is growth. So the unemployment, the growth. I mean, I think we spoke about it before the cameras came on. I think this, what is the unemployment in South Africa? What is the crime? So there are amazing opportunities in South Africa. If we compare ourselves to the rest of the world, as we were talking earlier, I think South Africa is still a unique playground, and there's some amazing opportunities.
Yes.
In the old days when I started in private equity, you could have taken a dart. Quite honestly, seriously, Oliver, and you could throw it at a dartboard, and you'd be okay if you did enough deals. I think today that sort of dartboard approach is certainly not going to work. I think the growth has definitely slowed down. I think we've got a number of challenges in South Africa from a legislation point of view, and I think from a capital point of view, capital's getting harder. So in the early days, there was lots of capital, lots of growth. We had a high inflation. Quite easy to make money in private equity with
Sure.
in a slightly higher inflation environment. Lower inflation, lower growth, higher cost of debt. Starts becoming, you've got to choose your assets quite carefully. So I think that to me is probably, as I say, the growth and how South Africa is positioned on the world stage, because the world is getting smaller. That probably is our biggest concern. But there's still as I say, there's still some wonderful opportunities that we see on a daily basis.
Yeah, capital ultimately goes where capital is welcome,
where
it feels welcome, where it feels it can get the return that it desires for the risk that it believes it's taking.
Good expression, yeah.
And here, sometimes there's not enough regulatory certainty. We spoke a little while ago about some of the tax changes that have been mooted around town at the moment around the preference share structures. It's that sort of uncertainty that makes deal making even more difficult.
Exactly. So there's a flip side to the coin as well, where as a local private equity player, we understand the rules a little bit better. We're on the ground. We're a South African house and always will be. We've got assets in the UK, and we find that market particularly exciting for us. But by the majority is always going to be in South Africa. So for some reason, on the as I say, the flip side, we kind of protect a little bit. There's not a lot of international money coming in. The problem with that is, yes, so we've got a captive audience, and we've got less kind of competitors to deal with. But when it comes to selling, we need the foreign capital.
Yes.
Because private equity is one thing getting in. You make your money on pricing the deal right, but really the real money comes when you exit. And if there's no proper money coming in and capitalizing South Africa, it becomes very challenging to sell, because then we're selling to the same players. It's past the parcel.
Past the parcel.
Which is not a good market to be in. Yeah.
There was very much a theme at last year's SAVCA event.
Yeah, it's exactly.
Where there are acquisition opportunities, and we can find great businesses to go and buy, price them correctly, they can make the return, but how do you get the exit?
Yeah.
And increasingly seeing a lot of private equity firms reaching out for assistance around how do we get exits for these? Can we help find other opportunities to find exits? It's not obvious. I was reading something recently from Goldman Sachs in the US, and that seems to be a trend even in the US is how do we go and figure out what an appropriate exit looks like?
Yeah. So I think on the small cap stuff in South Africa, there's no issue. I think there's enough capital chasing probably a relatively small number of deals, and there's a number of sort of funders who are adequately funded to do small deals. But where you take something in a mid-cap space and now you grow this asset, and if you grow an asset now from, say, you buy into a business making 100 million EBITDA, you grow that to 500 million successfully with your management team.
Yes.
Who do you sell it to?
That's the issue.
Because all of a sudden, a 500 million EBITDA business in South Africa is now big. Our IPO market, our listing market has got question marks, and it's challenging to get stuff off and get it on market. And now private equity, who's got the scale to be able to do and put a couple of billion out in the market? Not many. So unfortunately, that's where we sit in a conundrum now, where the small end, there's enough going on, but we need to build that second tier private equity layer as you get up into the sort of larger deals. And a lot of players have kind of left the market. We used to have Carlyle, we used to have the Ethos, Bain, you name it. All the banks, Standard Bank was in there, Investec was in there. They've all pulled out. So there's a limited number of players who are playing in the sort of small cap to bigger size now. And that's a problem on exits.
One of the advantages you have from a RMB Corvest perspective is that you do have this ability to be patient.
Yeah.
You mentioned earlier your one investment, Fidelity, that you've held on balance sheet
over 30 years.
You don't have that sunset that you need to move it out of fund one into fund two.
Yeah.
That's a huge advantage. And I think we mustn't forget that at the heart of this is an equity investment, and an equity investment does need to be a little bit patient in its nature.
Yeah, so I think we've got the luxury. I think although that timelines they're getting less. I think in the old days where, as I said, there was more capital. Capital was cheap. I think today the sort of whole drive is around return on equity, return on capital, and we've got to churn. So, even a Corvest now, we sit with 53, 54 assets on our balance sheet. Wow. We have to churn it. So we're constantly looking, yes, we want to buy, but we can't let that number just keep growing.
Yeah.
So I think the luxury of sitting on an asset for 30 years, I don't see that movie playing out many times more.
Mark, I know you've built a fairly strong, young, capable team around you. In fact, you've recently been able to go on a sabbatical.
Oh, we don't tell anyone about that.
Okay.
I'm joking. No.
What is your management style within the private equity space, and what is it that you're trying to impart onto the team around you that they can afford you as the leader of that team to be able to take that time off?
So I think we treat, and I'd like to think we treat our own team like we treat our investments, and we treat the entrepreneurs within the portfolio. So it's very much around, you've got to be a self-starter. Private equity is not for someone that needs to be managed. If you need to be managed and you like sort of rules, and private equity is definitely not for you. I think the way we manage it, everyone basically runs their own portfolios. So, there will probably be two per asset. But those teams very much, they go find new deals, and that's the task. Guys, you've got a blank piece of paper. You've got a funder like RMB that if there's good opportunities, they will keep funding. And you've got a lot of autonomy to go out and make it happen. So people don't have to be spoon-fed. And I think that's the latitude that I'd like to think, my founders gave us. When I joined Corvest, we had very strong founders.
Yes.
And that's what they instilled in us, guys. Just this thing, make it happen. Make a plan.
Get it done.
And just get it done. It doesn't matter how. And I think that sort of philosophy from a Corvest point of view is very much there. The team is flat. We don't have fancy titles. And everyone gets out there and they run their portfolios and they run it autonomously. And when there's a problem, yes, we sit down as a team, or they sit down with me and, guys, we've got an issue. But by and large, they run their portfolios. And it's almost like a mini P&L that everyone measures themselves. I don't have to measure them. They measure themselves. Everyone knows at the end of the year, am I up or am I down? Have I done a good job? We could almost, I'd like to think we could do away without our performance appraisals. But it is like that. Because of the flat structure, people know exactly where they stand. And everyone's an equity shareholder, which also helps. So everyone is like their own entrepreneur on obviously a different scale, but we breathe and sleep the portfolio. If the portfolio does well, we personally do well. When the portfolio does badly, and unfortunately nothing's a straight line and we make mistakes and some of the assets get into trouble, we personally pay the price. And that's why the alignment is brilliant.
Two valuable points that you raised there, and I think they're applicable to almost any entrepreneurial business, whether it be private equity or maybe something that you've invested in. There is the concept of accountability and alignment of interest that's there, where you've given the management team the accountability to be able to make their own decisions, but get the benefits of those decisions through it. So that's the first important one. And the second one is the one that we speak about regularly here, is that entrepreneurs need to make decisions frequently. Make a decision. You might not get the decisions right, but make the decision and move on. And so how do you empower those within your team to go and say, it's okay to make that decision?
So I think history, again, come back to the history. How have you treated colleagues in the past who made mistakes? I've made mistakes. We've made many mistakes. You just want to be on the right side more than the wrong side.
Sure.
So, and if we got every deal right from a private equity point of view, it clearly tells us we're not taking enough risk. There should be an element of risk.
That's a very good
And
point.
there should be an element of losses. It's like a bank. If a bank's got a 0 loss ratio, they're doing something wrong.
Yep.
You just got to make sure you can manage it within a portfolio. So I think where people are making mistakes, we never blame the individual. It's the team. Once we make that decision, so the team member brings the deal. He promotes the idea, and he will live and breathe that deal while that asset is surviving.
Yes.
But if, for heaven forbid, if something goes wrong and it doesn't make it and, we make losses, it's a team decision. Guys, on the flip side, if it does well, the team does well. So I think that philosophy is very much, guys, we make whatever decision we make at the end of the day, we don't look back and blame people. Made 10 decisions in a row wrong, I think there's probably another career calling for the individual. But it generally doesn't happen. People learn by their mistakes. And we all learn. And I also keep learning, So.
Yeah, that's great. And what are sort of macro themes that you might be exploring within Corvest's themes, that particular sectors that might be of interest to you at the moment? Has anything caught your eye?
So I think we've always been a house that's been, I guess, sector agnostic, where it's, we're a generalist, and if there's an opportunity and there's a value play, trust me, we'll look at it. And if I tell you now we're not looking at mining services or we're not looking at retail, and all of a sudden tomorrow I know what's going to happen, there's going to be an opportunity that knocks on our door at the right price, we will look at it. So I think that's one thing. Having said that, there are sectors that are playing out quite nicely. So pharmaceutical, for instance,
yes.
The whole pharmaceutical space is becoming quite exciting. More local manufacturing, cutting out lead times. I think Trump is certainly pushing us down a direction that I think local manufacturing is going to become, and less exports. I think it's driving some sort of sectors, whether it's good or bad. Education, sort of online education, tertiary education. I think something that's also playing out in South Africa quite heavily at the moment. So probably those two sectors, pharmaceutical and education, are, if you said to me, choose a sector that we'd like to focus on, I'd love to say, yeah, we would do that. But we are not the States, and I think South Africa is a very small market. So, we don't try to specialize. As I say, those would probably be the sectors that are growing more than most. Having said that, mining services in South Africa is still going to be a core pillar of what we see.
The city, Johannesburg, is still at its heart a mining town.
Exactly.
Mining services are core to what we have here.
Yeah.
But the two sectors that you mentioned there, healthcare and education, they probably speak more to long-term South Africa maybe not being as bad as people might play it out to be, because both those sectors benefit off a growing middle class,
exactly,
a growing amount of expenditure. So do you have an outlook on the South African economy?
So, I think, when you try and narrow it down to two sectors, I think all sectors benefit from that. So, I think we've got various things across our portfolio where we can see the sort of middle class or sort of lower income group coming through. So there's definitely if you want to look at a product from a product point of view, if anything's into that sort of mass market, that is growing exponentially. It really is. But I think from an overall sort of crystal ball gazing, it's very hard, Oliver.
Very difficult.
As I say, I leave that to the analysts and some of the fortune tellers. I think for us, as we're very opportunistic. I think we're nimble. And I can tell you now, within 2 weeks, something will happen in the market where there will be a gap. And whether it's a gap because there's an opportunity or a value play, that's what we just need to be able to react quickly. I think you talked about it earlier, making decisions. And that's what we try and still, guys, make a decision. Sometimes any decision is better than no decision, most of the time. And if you can make decisions quickly as a house, you can be at the forefront of a lot of sort of private equity guys. But don't follow the herd. Following the herd is dangerous.
It's always been dangerous. Yeah. The herd is always wrong.
Yeah, exactly. So I don't think you need to take a contrary view, but you just want to be slightly ahead of the herd. Sure.
And if there was a youngster looking at this podcast and maybe wanted to explore a career in private equity, what would you tell them to focus on? What should they be studying? What sort of core skills should they be concentrating on?
Well, the first thing I tell them to save some money before you enter private equity, because you're going to need those savings. It's a long-term game. So, corporate finance is a far more younger, stimulating, probably lucrative career while you're in your sort of early days, because the money and the bonuses are good. And I think if you're successful, that's certainly quite exciting in your sort of early career. Private equity is very much it's a long-term career. It really is. And we always tell guys, don't come in, if it's not a 20-year game plan, do not join private equity. You'll probably, the first 5-6 years, you're just getting to know the team. You're getting into, hopefully, the carry. But the money in the carry takes 10, 20 years to actually...
patient game.
It's a patient capital game. It's a very good game if you get it right, but it's a long-term game. And it's something it's almost the last career in your portfolio as a youngster where you want to get in. You don't want to get in too young. I think it's... you need to come into private equity once you've got some experience, once you've got a network, once you've established yourself, especially in Johannesburg. In Johannesburg, it's a small town, but it's still, there's a lot going on. And I think if you can spend 10 years in the sort of corporate field, whatever it is, it doesn't matter. But just building those networks, finding out about companies, meeting 1,000 CEOs over the sort of next 10 years, private equity is then that's the kind of career ultimately in your sort of mid-30s where you get into. But we always tell people, don't jump in too early, because it's something that can be very lonely. And as I say, it's you don't work in big teams. You work in one, probably by yourself, or you work in teams of two. And the opportunity to learn comes from your earlier career, not necessarily from the private equity.
Yeah.
So, yeah.
And what role do you see private equity playing in the South African market? Kind of going forward, we touched on very briefly about what's happening in the exchange. So a bit of shrinking on the Johannesburg Stock Exchange. What role do you see in private equity in kind of mobilizing capital?
I think it's massive. And in a South African context, I think it really is private equity is the only thing that's, I think the banks have stimulated this market tremendously. And private equity, obviously we're the custodians generally of the banks. Ultimately, there's a bank somewhere that's lending the money. But it's not, the JSE certainly is not helping from a small cap, mid cap, any size cap. You've really got to be mid. I think cap wise, market cap. If you're under 12, 15 billion rand, you're wasting your time getting onto the market.
Yes.
So it's great for a handful of companies in South Africa are that size, but majority of the employees in South Africa are not there. So private equity, I think, over the last 20 years has played a massive role in stimulating. And growing those businesses. And that's from an employment point of view, from getting into new markets, taking on Africa, taking on the UK, for instance. You can't do it without having a partner. And as I say, the JSE would be wonderful if they were coming to the party. And, we'd like to think it's getting better. But there needs more certainty that you can get listings away. And unfortunately, the market has shrunk. But these things go in cycles. And, we're optimistic. We think... As I say, from a JSE point of view, we're excited. We also want to take businesses back to the market.
Yes.
That's how the whole evolution of the markets work. Initially you've got venture capital, which South Africa's there's a lack of venture capital. Again, it's developing. Then you've got the private equity guys. And ultimately you've got, the listings market. And we need all those channels to work properly to get South Africa from an employment point of view, to get the growth rates that we need. We need them to all be firing. And as I say, right now, there's a lot of capital washing around in private equity. I think it's an important element for black empowerment. If you see what private equity has done for black empowerment, it's created billions. Those billions ultimately find most of it, not all of it, but most of it finds its way back into the market and then stimulates the economy again. So again, black empowerment over the last 20 years without private equity would be absolutely nowhere.
That's a very good point. On a previous Private Test podcast, we had Matt Marsden here talking about the venture capital sector. It's such a nascent industry still in this country.
Yeah,
difficult to attract capital there. When private equity, you can get a 25% return if you've done things properly.
Exactly. Why take the risk?
Why take the risk of venture capital? But we do need that entire ecosystem working, where you've got the venture capital, you've got the private equity in the middle, and then the mature markets like the exchange.
Exactly. I think the problem in South Africa is there's just not enough venture capital opportunities, because private equity, for every 10 deals we do, 7 would be probably pretty good. 2 will be probably subpar, and 1 might not be so good. Venture capital, you need to do 100.
Yes.
Now, if you're
going to find 100 transactions.
If you're not doing 100 deals, you're not going to get the portfolio effect, and you're going to struggle.
Yeah.
And I think that's the problem. Whereas the States, the UK, they've got those opportunities. So I think we've got the capital. There's a willingness in you go to Cape Town, especially Stellenbosch. There's a lot of wealthy individuals prepared to back a lot of venture capital stuff. There's just not enough of them. Not enough opportunities for them to invest in. And
from a Corvest perspective, do you look at investments north of the border, up into the rest of Africa?
So we have, not all successfully, I may add. We find Africa from a private equity point of view very challenging. I think RMB, for instance, has done very well on the debt side, but getting in as a partner, private equity, it's a partner. Is
that because of depth of market that's there?
No, I think it's just an evolution of where it is in its infancy in Africa in terms of partnering with parties. People they need to understand you're a partner. You're not just a bank coming in to provide them debt that needs to get paid back over a sort of a 10-year period. We're a partner. We make decisions together. And some of our African counterparts, it's not how those markets were developed. You're going into very difficult to get into bed with some of the partners where they're not used to having a partner to make decisions with. In Africa, it's not for the
not for the faint-hearted.
Not for the faint-hearted, and you've got to make quick decisions, and it doesn't really suit a traditional private equity house in South Africa. So we've tried. I think it's not we battle. As I say, UK earlier, UK as a market would probably be more closer akin to South Africa. Got good management teams, got good established debt markets. Africa's more, the debt markets are getting established, and we need that to play out more. And hopefully in 5-10 years' time, those markets then will be ripe for private equity. But right now it's not. We don't see that. Sitting with co-shareholders in the rest of Africa, it's a long way away. Africa's a big continent, and we just find it from a distance point of view. London feels closer than Lagos, for instance, which is crazy.
Yeah, that is a recurring theme that we're seeing here. A lot of South African entrepreneurs setting up shop, putting capital down in the UK, finding investments, replicating this ecosystem in the London market. I was there recently. Yeah. A lot of conversations with South African clients there. Yeah. There's a similarity in style. It's not exactly the same. There are a lot of lessons for people to learn going to a different jurisdiction.
I think the size is appealing to us. If you take now, we always talk in EBITDA. If you take a sort of a £5 million business in the UK and EBITDA, that's that's over 100 million rand. That's a nice business.
Yes.
And there are thousands of £5 million businesses, thousands and thousands. So in the UK market, the established private equity players don't want to play there. It's too small for them. So,
but for us, that's bread and butter.
For us, earning, as we talked about earlier, earning £1 and earning £1 takes the same effort.
Yes.
So to grow a business in the UK, you've got quality management teams. We lack that. South Africa doesn't have. If I look at our portfolio, when it comes to succession and replacement of assets. And replacement of CEOs for whatever reason. The guys get to retirement age. There's not a massive queue outside the door that we can go and replace seasoned, experienced CEOs. Whereas we find in the UK market, they've got the skills. And South Africa lacks the skills, and I think we're underplaying how bad it is. I think we've lost a lot of our youngsters. They're not coming back to South Africa. And I think we're losing those skills, and we're not having those 30, 40-year-olds coming through with experience. So if I look at our portfolio, a lot of the guys they're all into their 50s, 60s, 70s, 80s even. But,
no one to hand the reins out.
Where are we going to replace them? It's fine if there's family members coming through the channel, but many times there's not. Even the youngsters in the families, private capital want to go offshore. It's greener pastures. Yeah.
Mike, it's very obvious from just listening to you that you absolutely love your business. You love what it is that you do. You've been doing this for a while, but you've still got huge passion for it. That comes through in everything that you say here. It's been an absolute pleasure having you here and kind of pick your brains on this private equity world. Are there any kind of final pearls of wisdom that you might want to share around private equity, or what keeps you motivated and focused still after all this time in private equity?
I don't think there's any massive pearl. I think all of it comes back to, you've got to enjoy doing what you do. And I think this is not a job. I've never seen private equity. It's a career, and it's a passion. And if someone's not passionate about investing, then you're in the wrong game.
Yeah.
But no, I think I'd like to think most people in private equity, it's the world's best kept secret. We don't tell the world because we'd have a lot more competition. But I think everyone in private equity absolutely loves it. Is the world's best job. You get to work with the brightest people. You get to see the brightest founders and entrepreneurs in South Africa and abroad. And you sit as a sort of a helicopter view. You're not the one that has to open the factory on a Monday morning. You're not the one that has to close the factory on a Friday. But you get to see how it's, what actually makes it tick.
Walk the journey with them.
Yeah, and it's exciting. As I say, from a helicopter view, you get a very good snapshot of SA. So for me, that's the passion. Sitting on a portfolio every month, we can see exactly what's happening in corporate SA. And quite often we read the news and we know the news is wrong because we can see what's happening. And I think that's exciting. But when it comes back to pearls, no, there's no magic pearl anywhere.
I think you've shared lots already, whether you realize it or not.
Yeah.
This has been an absolutely fascinating conversation. I think we could have probably spoken for hours and hours on end about this. It's a sector that I know both of us are passionate about getting involved in. Us more on the advisory side of things, but you from a private equity perspective, just partnering with entrepreneurs and helping them along their journey. Mike, thank you very much for your time, and thank you for joining us on the Privateers podcast.
Yeah, pleasure, Oliver. Thank you. Thanks for having me.
Thank you.
Cool.